Welcome to Profiletraders. This is Reza and you're listening to my market analysis for February the 29th. We are looking here at a chart of ES and let's see a little bit what happened. In order to get a better grasp, we're going to bring a daily chart and see the big picture first. Big picture is the following. If you were able to hook these two bottoms here, you would have an extended line into the future, which was expected to act as resistance when price would get to that zone. And especially that resistance was a very sure thing to hold, because that we came up pretty much straight from 1800 to 1950, almost 150 points rally on absolutely hot air. Hot air. Nothing fundamentally has changed nor improved to justify a 150 point chase to the upside. So this was a combination obviously of some short covering and heavy ETF fund manipulation to the upside, because don't forget, every time that money starts to exit out of the ETFs and some other funds, these crooks freak out and they unleash all that they have to reverse the market back up, because there is only one condition that brings money back into the market, and that is up market. Market never ever sees capital coming into it when it goes down. Only time people put money back at work is when they see market going up. So we were reaching very dangerous levels here, and of course the invisible hand magically showed up and out of the blue and out of nowhere reversed the market by 150 points to the upside. But of course, after 150 points hot air rally, you need to kind of let it rest a little bit. And now 2 days in a row we tried to push up, but we weren't able to maintain and close above 1950, and now we came down and very much so close at 1930. So now without any doubt, 1968 to 1970 is a short-term top. So I repeat, 1968 to 1970 is short-term top. Until that top remains, market should retrace a good portion of these 150 points hot air rally that we have seen. The close of the day was extremely bearish with a reading at 1930, very close to the low of the day. Complete total control by the sellers. Therefore now we need to figure out what the real strong resistance numbers are, and if price get to those numbers, they should be sold into it in the direction of this short-term downtrend that has established itself since Friday with the close at the low and today with the close at the low. 1941 is the very first level of resistance. After that there is really not much prior to 1949 and a half, or rounded up to 1950, and then after that 1957, which I called it to be the high today. It missed it by about half a point. So any push back up to these three levels should start to encounter significant resistance. On the way down, the very first level of support of significance is 1920. 1920 breaks, we have a POC down there at 1906, and then if 1906 doesn't hold, of course the round number 1900 will be one to look for, and below 1900 we have a naked POC at 1887. Now for crude, the funny part is that it didn't follow at all what ES did, and it managed to close at the very high, complete total reversal of what ES did with a close at the low. So can this be seen as bullish? I am not yet very sure that I will call this market a bullish market ready to have firework to the upside. If I bring you the daily chart of crude, you may be a little bit scared because it's one of the nastiest daily chart that you can encounter. The pattern is terribly messy. We are in reality in a $5 range chop that goes between $30 to $35. And there is no rhythm, there is no pattern, there is nothing in this chart. It's a chaotic mess. Random, one day down, one day up, one day down, one day up. It is looking absolutely horrendous on the daily. For anything slightly bullish to happen, price has to break above $36 decisively. Until we remain below $36, you're gonna be contained within this very ugly trading range going from $29 to $36. So what will happen tomorrow? Hard to tell, because it's very random. One day is up, one day is down, one day is up, one day is down. But so far they managed to close it on a positive side, which I can say that the buyers did a good job, because it could have very well follow ES and crash, but it didn't. So now first level of support 33.46, after that level 32.85, after that level 32.30, and then finally a POC down there at 31.74. So these are 1, 2, 3, 4 level of support. As for resistance, obviously if tonight we are allowed to trade into this zone of singles, very well price could go up first to 34.42 and then 34.72, which is this high here, and after that 35. I very much so doubt that we will break 35 with ease. Any price past 35 should encounter significant resistance. Also be reminded that tonight is the Chinese PMI, very important number, very big market mover. So it's gonna be jittery, it's gonna be volatile, and I believe this unease in all markets should continue until we get clear sign that either economies are improving or that the situation around the globe financially is stabilizing, which we have not seen either or. So that's it. This is it for today. If you wish to learn market profile, join an honest trading room, get very good educational material. Check the package I'm offering from our website, profiletraders.com. And if you decide to join, your humble servant is here to serve you. Have a wonderful evening.